Good morning. Welcome to IG's early morning call, midweek trading session. It's Wednesday, the 11th of October. Let's take a look at the headlines as we continue to monitor what's going on at the foreign exchange markets. The dollar continues to weaken after we see officials from the Federal Reserve come out with more dovish comments, suggesting that this recent rise in the dollar has done much of the heavy lifting. And we got the FOMC minutes out a bit later on today. But the big question is are we back to a risk-on mode? Take a look at the volatility and suggesting there that we've got further weakness on the volatility markets as we see Wall Street, the European market, the APAC all close high yesterday and overnight, and looking for slightly stronger start to get underway in a short while in the European session, holding on at least yesterday's gain. But the interesting one is that gold remains near the highs. And we now know the price of Birkenstock on the IPO. It's $46 per share when things get underway later today, valuing the company at just over $8.6 billion. What a price for a pair of pants. Take a look at volatility. Down for a sixth day in a row, actually. 1755. That, of course, includes that spike high that we saw, the highest trade that we'd seen since the 26th of May. That goes back to Wednesday last week. So it's been a week of losses. 17.55. This means that we've got more appreciation of risk assets, which, given the geopolitical risk which now seems to be in the market, one wonders why we've got people buying risk assets. I think there's a good excuse for London because it's got a slightly higher concentration of markets that are benefiting from the move that we've seen, these attacks over the weekend and the subsequent retaliation by Israel. And this has pushed up the price of oil. And oil is really one of the areas of benefit, gold as well to a degree. But London benefits from this sort of trade. And you can see in the last few days, yesterday especially, up. And we're holding on to the gains pretty much not too far away from the close on the cash markets yesterday. But it's the same sort of thing across Europe. This is the German markets. Nice strong candle yesterday on the upside. 15,384. Again, pretty much where we left off the cash session yesterday on these 24-hour markets, indicating to me there's not really going to be much move, possibly a little bit of weakness maybe in the French markets at 71.07, but broadly speaking, these markets holding on. I think there's a couple of things that the markets are holding off for. FOMC minutes later on today, US inflation tomorrow, and then we got the start of the third quarter earnings season on Friday, some of the big banks reporting. And it'll be that, I think, when that third quarter earnings season unfolds, and that'll bring us about with perhaps possibly maybe a new opportunity to gauge how corporates are feeling. Let's take a look at what's been happening in other areas of the market with what's been going on overnight in the Asia Pacific markets. As I said, gains across the board. And you can see here with a rise of 0.2% for the Nikkei, ditto for the S&P ASX 200. Hang Seng Stock Index, which when last looked was up just shy of 2% on the trading day today. So money going in there pretty much across the board. And as I said, with volatility on the way down, we've got Wall Street as well, showing us with gains yesterday. And we've got a broad spread of a rise. And again, it's a bit like what we have seen in the European markets. If we look at the 24-hour markets on the IG platform, not much move on from the close yesterday at 15,153 for the Nasdaq. Yesterday, the markets there knocking on the highest levels we've seen since the 20th of September. So the market's benefiting from that recent move back into some of these companies, especially those tech stocks, but also old economy stocks as well. In yesterday's trade, the intraday trade, we saw the highest since the 26th of September on the Dow Industrials. And again, I think really markets just waiting for more evidence that they've taken things in the right direction. And there's more suggestion that we've got the Fed likely to remain possibly towards the dovish end of hawkishness. Certainly the market's pricing in one more interest rate rise. The question of whether or not that will be one and done. In terms of where we are in terms of some of the economic data points to watch out for, we do have some releases in the States later on today. Producer prices out at 1:30 p.m. today, UK time, expected to increase in the States by 0.7% in September compared to August, up 1.6% year on year. And later on this evening, 7 p.m. UK time, FOMC minutes. Do we look at these? Well, under normal circumstances, yes. But there's not really much there expected to move the markets. We've seen so much commentary recently from many of the Federal Reserve components, the voting members and non-voting members. I think that potentially there is not actually much that the Fed minutes could say which would offset some of what we've been hearing. This is the dollar basket pulling back recently. And you can see we're not too far away from recent lows at 105.54. Yesterday, more Fed officials coming up with more dovish comments, encouraging this dollar move that we've got here, breaking below this rising line of support after Dallas Fed President Lori Logan and the Vice Fed's Chair Philip Jefferson on Monday with dovish comments. More Fed officials coming up with dovish comments yesterday. Atlanta Fed President Raphael Bostic said the Fed did not need to raise borrowing costs any further. Similar remarks from Minneapolis Fed President Neil Kashkari following on later on in the day. Dollar, as I said, is losing steam in the face of all this. If we were to look for one dissonant voice, I'd bring up Christopher Waller. Let's take a look at what he said. He's the Fed board member reiterating yesterday the central bank's determination to bring inflation down to its 2% target. This is what he said. Price stability is a primary responsibility of the Federal Reserve. This is why we have taken forceful steps aimed at reducing inflation and why we will stay on the job to achieve our objective. Yet, Christopher Waller didn't express his views on the best immediate course for monetary policy. So, to a degree, standing on the fence. Euro-dollar trade, this is the way to trade that dollar basket. You can see we are, as of today's trade, not much move, a little bit of a doji star candle, as of yesterday's close at 106.07. If you wanted to go into the trading day today with a long position in place ahead of the Fed minutes, that would be a slightly weaker dollar resulting from all that. Your stop goes below yesterday's close at around about the 105.50 level. 106.07 is where we're trading. A little bit of a headwind breaking up just a little bit ahead of where we are. I've still got this line of 106.35 on here because of the lows we had back on the 31st of May. So that's a sort of an area to watch out for. And then you've got these moving averages further on up at 108. Which was another area, I think, to watch out for in terms of some of the upside resistance. MACD turning around the last few days, indicating that people are beginning to appreciate the upside for the euro against that slightly weaker dollar. So that would be the trade there. Just to stay on the foreign exchange markets, and I just wanted to run through a couple of other crosses. This is the Aussie recovering against the US dollar. And it's the same picture as well for sterling, GBP USD. Same sort of trade that we've got where we've seen sterling benefit, and in today's session we've seen an intraday trade not seen since the 21st of September. Highs there for sterling against that weaker US dollar. Now let's take a look at some of the stocks to watch as of the beginning of today's session. At the top of the hour, I would suggest you look at PageGroup. Interesting details coming through from the recruitment company. Gross profit down 7.9%. For this trading update to £242.2 million. The company says that it expects operating profit to be between 125 to 130 million. I don't think there's much difference on from what we'd already expected. But interestingly enough, you drill down, EMEA down 1.3%. French recruitment was up 1%. And indeed, more interestingly for me, Germany was up 5% when you consider the problems in the German economy. The German economy producing more jobs. As measured by PageGroup. Americas down 13.3%, US down 25%, Asia Pacific down 11%. For me, one of the other interesting numbers to watch out for is the difference between permanent staff and temporary staff. This is a trend that is now in place, and we've got permanent staff down 12.1% for the year. Permanent business represents 72% of the total group revenue. So permanent staff down 12.1% indicates to me recruiters at companies not really wanting to look at recruiting long-term staff. Temporary up 5.8%. Temporary business represents 28% of the group revenue. So it's a minority part, but nonetheless, I think this swing towards temporary is significant. Look at the share price chart. We've seen this rising line of support from the lows I had. In fact, the lows down here at £4 back on the 8th of September. Since then, we've seen these higher lows and higher highs as well, to be honest with you. We're opening at 422. If you are long on this at the start of today's trade, your stop goes under the underside of this rising line of support. Not a trade recommendation. I don't know where it's going to go. We'll have to see what happens. But if this trend remains in place, that's where your stop loss goes if you are long on this. But I think equally there could be a possibility of some downside possibly to the trade of the recruitment company. Depends on which way you read the data out this morning. Meanwhile, let's take a look at another company. Late last night, after the French close, we saw the luxury conglomerate LVMH seeing a drop in sales in the third quarter. Demand for handbags moderated, sales for spirits falling after several years, it has to be said, of stellar growth in the spirits business. This is the French group which trades on the French CAC 40, controlled by the world's wealthiest individual, Bernard Arnault. So the sales grew 9% in the third quarter to 19.9 billion euros, and that's down 17% rise in the preceding quarter. And the company says this is reflecting softer luxury sales growth worldwide, notably in the US and Europe. Let's take a look at some of the figures that we've got. Sales in Asia, excluding Japan, up 11% in the quarter, down from 34% in the previous 3 months. In China, there's been no marked change, according to the statement. In Europe, most countries were now growing in the mid-single-digit range, according to the statement. Sales at LVMH's fashion and leather goods division, this is its biggest single division, grew 9% in the third quarter. Looking good, you might think, but that was a slower pace than the 21% growth in the second quarter and below estimates of an 11.2% rise, according to Bloomberg. So this is going to be a stock to watch at the start of today's session. The company doesn't trade in extended trade. We don't know how it's going to open, but LVMH trading under the ticker symbol MC, as I say, trades on the French CAC 40. You can see, actually, if you look at the trade, not too far away, recent lows. Let me just draw that line up there just to make sure that we can, doesn't look like I'm going to be able to get that up. Let me just take a quick look at where that line is there. 693.45 is the line of support. So if you're short on this, that would be your price target. We're opening at 73.380. If you see a continuation of this recent rise that we've seen, your next price target is up here at 76.760, which were the highs, sorry, the lows we saw back on the 15th of March. And you can see this line's been of interest here. So if you're long on that, stock goes underneath down here, underneath this line down here, with a view to taking it up there. But again, a bit like Page Group, I've not got to position this. I don't know where it's going to go. It's interesting to see what's happening, but I don't think there's anything here which shouts buy me on the markets this morning. So it's LVMH, one of the stocks to watch out for in the French session today. Now, as a new stock on the block today, Birkenstock has priced its initial public offering at $46 per share. Now, this values the company, which is obviously famous for making the Birkenstock sandals, at $8.46 billion. Now, the price was set in the middle of the expected range, between 44 to 49 per share. The stock will start trading today on the New York Stock Exchange under the ticker symbol BIRK. Watch out for that at the beginning of the session today. We won't be able to provide you with a chart on the first day's trade, but when we get a close this evening, we'll get a better idea as to the direction of travel when we see Birkenstock come to the market. If it's anything like some of the other recent IPOs, expect a lift off at the start and then some softness coming through with a potential drop below the IPO price the next few days. That is if it follows the recent moves, for example, from AIM. Arm Holdings, I beg your pardon, which came to the market just a month or so ago. Now, in amongst some of the other stocks to watch today, I just want to quickly bring up an animation showing you what's happening with one of the biggest purchases in the oil sector for many, many years. According to Reuters, Exxon Mobil announced today the acquisition of Pioneer Natural Resources for about $60 billion. Now, Exxon's expected to make a pure stock offer valued at more than $250 per share. Pioneer shares closed at $237.41 yesterday, having risen 11% since the first reports of a deal surfaced last Thursday. It would be, if it happens, which it looks like it almost certainly will, the largest acquisition by any company this year, and Exxon's biggest since its $81 billion purchase of Mobil Oil back in 1998. Remember that? That was a big time there in the markets for that. Let me just quickly show you what's happening. Exxon Mobil, for the record, 109.78. This is an all sessions stock. It will get underway at 9 o'clock this morning on the IG platform. What you won't see early trade for is Pioneer. This is the rise that we've seen recently. Pioneer Resources is, that's the price target, it's $250 up here. There's no doubt that we'll see a rise up to that, assuming this deal comes through. And then Pioneer will come off the market, subject to the final deal being agreed by shareholders, which I guess will probably, in the current situation, be something that the markets will go for. I haven't heard of any problems in terms of what Exxon's doing in terms of the dominance in the market. But what it does is it means that Exxon will have a majority share of the Permian Basin, And that, I think, is possibly the only area of concern for these large deals. And there could be a monopolistic worry about all that. But we'll have to see how things develop. But Pioneer, one of the biggest frackers in the Permian Basin. This now means that Exxon Mobil will get a lion's share of that business. There's been a change at the top of Walgreens Boots Alliance. It's appointed Tim Whitworth as the new chief executive officer. He was the founding chief executive of Cigna Health Services organization, Evernorth. He also previously led Express Scripts, a US-based pharmacy benefit manager. So he's steeped in what Walgreens does. He replaces Rosalind Brewer, who abruptly stepped down in September. And that was the end of 2.5 years at the helm for her. In that period, Walgreens Boots Alliance valuation halved and the planned sale of Boots was called off. This announcement comes ahead of the group's quarterly report, which is due tomorrow. Let's take a look at what we're expecting there for earnings. Expected to come in at 69 cents per share on revenues of 34.82 billion. Nice, interesting Boots logo there. It does own Boots still. But this is one of the areas of the market where people were thinking perhaps maybe Walgreens was going to ditch out of, but it hasn't had an opportunity yet. And I guess it'll now be down to Tim Wentworth to work out whether or not Boots needs to be part of this group. I want to show you the Walgreens Boots Alliance share price chart. This is the very long-term chart. We are currently trading, or as of the start of today's trade, will be at $22.38. And you can see if you look at this line down here that we have just recently dipped below that to take us down there to levels not seen since the 18th of August 1998. So Tim Wentworth has got a big job on his hands trying to restore some shareholder value in Walgreens. And will it be the sale of Boots that gives him a little bit of cash on the balance sheet? Let's take a look at just one other area of the market I wanted to follow up on, or two other areas of the market. The commodities market. Gold, first of all. Talking at the start of today's show about how the markets have been twisted because of the recent attacks at the weekend. And you can see that gold, broadly speaking, holding on to recent gains at 1862. I've got this line of resistance on here because it was the completion of this symmetrical triangle, and the escape from that on the downside took us down to this level down here. That was a projected sellout level of my symmetrical triangle here, which made money for those on that move. Since then, we've seen this uplift for people looking at some sort of safe haven. I've still got that line on there, which remains a line of interest in terms of some of the upside resistance. And we saw a similar sort of move with Brent and WTI. This is Brent showing us that big gap up that we saw on Monday because of the potential for restrictions on oil coming through from the Middle East. And currently trading not too far away from the recent highs at 87.39. That's it for me. Back at 10:30 with Chart in the Markets. Watch out for Page Group and LVMH at the start of today's trade in the European